Good morning, everyone. It is May 27th, Thursday, May 27th. This is Nadex Morning Analysis. My name is Todd Rich. I am with Nadex. With me this morning from Keep Trading Simple is Brian Caprice. Brian and I are going to talk about a couple of hot spots in the markets, what's going on this morning, what you might want to consider looking at. Before we jump into it, I do need to share that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what do we got going on? There's a few things that are going on right now. Number one, let's see, some comments out of the Bank of England. Comments out of the Bank of England that an interest rate rise would be appropriate. That came at 7 a.m. this morning Central, so that would have been 8 a.m. But as you can see, actually no, it came at 7 a.m. Eastern. I apologize, 7 a.m. Eastern. And as you can see, there was an immediate reaction with the pound. The pound strength, and really it clipped the dollar. A pretty emotional spike higher. The other thing that we're seeing, some numbers that were just released, the economic numbers. If you're not following the DFX calendar, you should be. But GDP growth rates came in. They were up. We are growing a little slightly lower than forecast, but still up. And then the GDP price index punching higher, kind of looking at more inflation showing up. So how did the markets interpret that? Out of the gates, the knee-jerk reaction from the markets, the Dow jumped and the NASDAQ got clipped. So they went in different directions. In any case, that's what we're going to be talking about today. We're going to be talking about the pound dollar. We might maybe take a peek over at the euro and see if something else is going on over there with the euro. But we'll also take a quick peek at probably the NASDAQ, and if it's worth it, and we have time, we'll jump into the Dow. So Brian, I am going to flip it over to you, and let's just get into it this morning.
Yeah, so as you mentioned, we just had news that came out at 8:30. The most interesting thing about this preliminary GDP number, you guys can see it right here in the middle of the screen, is the forecast was 6.4 all week. Yesterday, they raised it to 6.5, and it came back in at 6.4. So I'm wondering if forecasters are starting to get a little bit overzealous with the data that they're starting to see out there. Unemployment, this is not necessarily the biggest story these days, but it came in slightly better than expected. For new, the core durable good and durable good orders kind of canceled each other out, but although it's not marked high impact, this is a very interesting data result that came out. The preliminary GDP price index quarter over quarter. Basically, it's the rate or the change in price for the goods inside of our GDP. It was expected to be 4.1, and it came in at 4.3. You may say, I don't understand what that means. This is showing more inflation than was expected. If you remember, inflation is the big story right now. The Fed is taking a kind of blinders look on it, like, it's going to go away. Well, it's not going away. It's getting higher, faster than, it's growing faster than what they had expected, even forecasters thought. So again, forecasters can obviously be wrong, but again, this is another sign that inflation is coming in. Now, we mentioned inflation, and this is what we got out of the ECB. The BOE earlier today, talking about how the transition out of kind of this furlough should happen smoothly, but a rate rise would be appropriate. So now, we have, Kaplan and a few of the other Fed presidents here are mentioning, hey, listen, we got to start talking about it. We're seeing it there, but, again, it's transitory, right? BOE, and we've mentioned that they're a little bit farther ahead than we are in recovery. Now they're saying that they believe rate rises would be appropriate. And again, the result this morning, again, here's the euro pound straight down. Here's the pound dollar straight down or straight up. Pound yen, guess what? Hit that 155 that I've mentioned now for multiple days. Hey, listen, I can see 155 by the end of the week. Guess what? We did it in one day. So there's a lot out there, and it's a very, very big deal, because now not only do we have Canada starting to cut their support because of recovery, but another one of our allies, the UK, is also now starting to cut things back, right? Now, with everything, there's always fair balance in this. We also are seeing news today, out of Australia, that Australia is locking down for 7 days. Victoria has a highly contagious or a highly infectious outbreak. It's only 12 people, I guess, is what it was. But again, they're seeing things pop much faster, and they said something drastic has to be done before it becomes uncontrollable. And this is where is it? We're dealing with a highly infectious strain of the virus, a variant of concern, which odd that they don't tell us which one it is, but they said a variant of concern which is running faster than we have ever recorded. So, again, kind of mixed news, but when you have countries actually starting to get themselves out of it, I mean, who knows? Maybe the vaccines work well against this new variant that is troubling. And again, it's one of those things that pressure is going to be put on the Fed. There was one other article I want to bring up before we jump over and look at the charts real quick as well, is talking about how the Fed's expanding its powers and it's making some people nervous. I mentioned the other day that typically the Fed is purely focused, but lately it seems like the Fed is now becoming more affected by political pressure, that they used to be a completely independent board, and the government, senators were always, we need to control the Fed, they should have control. Well, it was always nice to have them be independent, and now what they're saying in this article, and again, so on CNBC, take it with a grain of salt, but they're talking about how the Fed used to use their policies to control inflation and keep unemployment low, because that's really what their mandate was. But now the Fed has extended its responsibilities as a bank regulator to fight against climate change. Climate change is not necessarily one of those things that is their mandate. It's more of one of those political pressure things. So now the question is, does the Fed really have as much power if it's starting to kind of overstep and people aren't looking at it? So it is very, very interesting, right? The way that it's kind of unfolding. Now, we mentioned the pound, and let's do the pound first, because I think they had the most news today.
Yeah, pound strength everywhere.
Yeah, and the reason why is in the currency realm, when you start raising interest rates, I mean, think about it. If you have money, do you want it sitting in a bank where you get 0.1% or 0.5% or say 1%, right? You want to put your money where you're going to get money back, right? So whenever a currency raises their interest rate, it makes it more attractive for investors to be able to put their money someplace. If you can borrow it, say, from Japan, and you're paying, to borrow it a 0.1% interest rate, but say you can get a 1% interest rate return over in the UK, it makes complete sense to take your money and borrow it from Japan and put it over in the UK. And that's what you're seeing, and that's why you're seeing this big push up. So not only are they ahead of the recovery curve, but one of the steps to curb inflation, because again, runaway inflation is very bad for the economy. Again, I'll show you in Q in a second what that means. It's a great place. And now, again, we've seen a huge spike. Now,
it's interesting, though, I will say, they didn't actually raise rates, so let's just be clear.
They just said it's time. Yeah,
it's one of their it's the Bank of England saying, "Hey, we're getting ready, and it would be appropriate."
It's appropriate now. Yeah,
just the mention of it had an immediate reaction on the market. Wait till something actually happens.
Yeah, and we've heard some of the lesser presidents. When I say lesser presidents, it's not like they're the less important people, but they're not at the kind of the figurehead, right? If Powell mentions that it may be appropriate to start, watch, the dollar will go crazy, and the reaction will be something very, very similar in all the dollar first pairs. It'll look more like this in all the dollar secondary pairs, right?
Yep.
Huge pushes to the downside, and again, it doesn't matter. This is how powerful it is. But just like this is straight up, if they mention interest rates, it's going to be the same exact rollover in the indices. And again, you're seeing the NQ start to really kind of capitulate back and forth. I mean, it was kind of coming up, and then bam, it started to push down. And again, it's one of those things. We were looking for a buying ability down here at 13,500. We didn't really get it. It just continued to move sideways. And like I said, it's still kind of stuck in that same channel. But if you look at this channel, you'll notice an area, right in here, right? We've had buyer step in, buyer stepped in, buyer stepped in. We've kind of probed again, probed again, probed again, probed again. These buyers don't last forever. And now you have a major ally talking about, hey, listen, it's probably appropriate to start raising interest rates, right? Yeah, it's probably a good idea. And then the other news out is Biden is proposing, $6 trillion budget boost for infrastructure and everything else. It's like, okay, let's just spend more money, right? So these are things that typically are not as helpful, if that's the word, not as necessarily helpful for the indices. Now, the Dow has been going up this morning before the actual news came out. The ES is kind of sitting flat and having some issues as well. But I'm thinking in here right now, if we have a break, and again, this could come in, again, looking at that inflation number, if they start talking about it, let me change this over to a red. If we get a break, really, of where these buyers were at about the 13,600 level, I'm wondering if that's what we see today, is if we see a pushback down into this 13,500 range. And again, kind of the same thing we talked about yesterday. If we were able to ground down yesterday to whether the UK Open or the US Open, that we'd have buyers down here at 1350. It's kind of the same thing today. It may just move forward to where instead of here down, we come from here down going into Friday. And remember, tomorrow's a holiday Friday. Not going to be as much volume. It may be, able to be manipulated a little bit more because again, the volume is not necessarily in there. And again, push this down. Could it be a feel-good Friday for a holiday weekend? Sure, it could be, right? Or it could be fast and furious in the other direction. So it's kind of set up the same way. And again, I'm looking at this parabolic move up and then a retracement back again. And ES is also kind of it was rallying up again, and that news came out, and it immediately shot down again, and now it's having some problems. So it is still messing around with the same level. You can see the spike here, the spike here, the spike here. But again, the pushes back to the downside, although it broke early this morning, the pushes are starting to get deeper and deeper and deeper and deeper, pushing back down lower range. So,
in fact, I wanted to show that real quickly. I mean, this is what we're seeing on the NASDAQ just recently.
Yeah.
I mean, those buyers step in. And I know O'Brien definitely always talks about levels of, where is that equilibrium for buyers and sellers. There also are these, there are some of these channels which you start to see where it's, lower highs and lower lows as it's trending lower. It does help you see a little bit of a trend, and the NASDAQ is just in the last day or so has been trending lower. Now the Dow, oddly enough, doing something a little different. I think the Dow might be moving more around some of those durable good numbers, which might impact just those 30 stocks a little differently than, say, the NASDAQ or even the S&P, which are much broader based indices. So, which is why we might be seeing the Dow up on close to 0.5% today, NASDAQ, which was down 0.5%, why we're seeing that split between the different indices. So just thought I'd share that quickly.
Yeah, and you guys know I don't really use a lot of indicators. I like price action more, but it's always nice to throw an indicator on and see what other people are looking at. One of them I like to throw on there too is Bollinger Bands, and you can see how this one has really been tracking top to bottom. The same way that the channel traders right now, the way that Todd drew it, the channel traders are looking for shorts as price pops them to that 13,690 on the net. But I'm sorry, 670. Bollinger Band, you can see this rode the bottom, came back up and touched, rode the bottom again, came back up, spiked to the far side, and then started to push back down again. But if you're looking overall, what the direction of this is, you can see that this is pointed down. You can see that the moving average in the middle is pointing down. And you can also see the lower side is also pointing down. So yeah, it may bounce back and forth and kind of give you this, we came down here and then we go up. But then again, the same channel traders, the same Bollinger Band, and again, Bollinger Band is just a statistical average, also pushes it back down. So, a lot of indicators attempt to show kind of the same thing, but understand things like this. I like this one personally. Like I said, I don't use a lot of indicators on my charts. I typically try to keep them clean. But one of them that I do have a lot of respect for is Bollinger Bands, because it takes statistical deviations and really tries to focus on where kind of the reversion to the mean is. And when the mean is starting to come down lower, 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 and lower, that tends to be areas where it goes. Now, not that it can't bounce, because it does eventually, but it will ride that low side. And again, seeing inflation start to creep in this number right here. And again, durable good orders. Core is kind of what we need. Durable is kind of like the extra, the extra stuff. Those orders are down, but yet we're seeing price inflation. And remember, when these are down, they tend to, it evens out. So kind of one of those things, it doesn't look like the rosiest day, and really today we don't really have any additional news. We have the pending home sales, which it's supposed to be lower than it was before. Again, it's always great when it's a positive number, but it is lower than last time, showing a slowing. And then again, maybe you guys trade it, maybe you don't. Just like oil was yesterday, and again, a lot of movement in oil. I don't know if you guys caught the oil movement, right? There was the oil movement yesterday. I can take Bollinger Bands off now. Hold on. There's the oil move, right? A lot of move back and forth. For some of you that understand the breakout and the horizontal strategies, again, I'll tell you guys about this tomorrow morning because we'll probably cover oil. Those were a nice little trade yesterday, but two big bits of movement. Well, guess what? If you guys want to do it again today, go ahead at 10:30 this morning. Go to natural gas. It's the same type of setup. Again, expect it to be a big increase, which again could lead to some absolute movement today.
Yes. Same thing in oil. Take a look at nat gas. We do have nat gas. In fact, I just wanted to bring it up just so if you weren't aware. By the way, as we showed the NASDAQ in that downtrend, again with those economic numbers, They're liking it in the Dow. Rather interesting. We are seeing that a split. So if you're, it is, you've got different interpretations on how it's going to impact different sectors of the market. So all these don't always go in the same direction. It is important to understand the differences between the different indices. I did want to take a quick peek over one real quickly over in our commodities. Let's just take a quick look at nat gas, and because it has been seeing some volatility. Price has been creeping higher, right? Let's, just as we saw some movement with that in oil yesterday around the report, you could definitely be taking a look. Jump over to dailyfx.com, take a look at when that nat gas inventory report comes out. You might see some volatility here. Brian, is there anything else that you wanted to bring up real quickly? I think we're going to call it a day.
Yeah, that's probably it. This is just a natural gas chart. You already pulled it up, so.
All right.
No
so with that, what did we cover today? I do want to kind of run down real quickly what we covered. Let me just do this. What did we cover? We talked about the Bank of England mentioning just comments that interest rates might be appropriate to start raising interest rates. The pound took off. The pound, absolutely pound strength. We had some economic numbers come out on GDP growth and the GDP price index, as well as some durable goods and some other things. We ended up seeing a split. While the Dow jumped, the Nasdaq is continuing into a little bit of a downtrend that it's been in for the last couple of days. Lastly, there's natural gas inventory numbers. You might want to take a peek. With that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can get him at support@keeptradingsimple.com. Want to thank everyone for joining us this morning. We will be back tomorrow morning. We will not be on Memorial Day. I think Brian and I are going to skip that one and take a day off. So we will catch you all tomorrow morning. Good luck in the markets.